market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the U.S. president is ramping up pressure on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Now, speaking to the FT, Donald Trump threatened to delay his summit with China's president and said that NATO would face a very bad future if they don't help secure the vital shipping channel. Well, speaking on board Air Force One, the president said he was in talks with 7 countries to get involved.
Really, I'm demanding that these countries come in and protect their own territory because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
Well, reports this morning say a major port in the UAE has been hit and damage there is being assessed. It's one of the world's largest oil storage sites. Now, events in the Gulf are adding to inflationary pressure around the world. Central banks are about to make their first assessment of economic damage after more than 2 weeks of conflict between the U.S. and Iran. Now, ahead of its Global Investor Summit this week, Bernie Mensah, the president of International at Bank of America, is here with me. Bernie, thank you so much for joining me. As always, there's, of course, a lot going on. There's a lot of anxiety about inflation, about, of course, also what happens to people in the region. Like, how do you view this as a first and second round impact?
I think that, thanks for having me here, Francine. Good to see you. I think this week is a lot of central bank meetings coming up, and I think that's exactly what they're thinking about. Is it a tightening because you think there's an inflation shock coming through, given a supply shock, or is it actually a hold or a weakening because the second-term impact might be a weakening in growth? So I think that's the question that the markets are trying to think through right now.
Do you worry about some kind of policy mistake? Because, again, things move pretty quickly, and we actually don't know what happens to the price of oil or the Strait of Hormuz.
Yeah, I don't worry too much about that, but I think they'll make decisions. We'll have to adjust to them. I think they're trying to make the right decision given the information that they have, as are all of the markets. So the key question is it temporary? And actually, when you replay some of the conversations we had during COVID, that's really the debate that they will have. I mean, my sense is that there will be a bit of a supply shock. How that feeds into different inflationary bits, we'll have to see. But there's an element of physical constraints as well as the price constraints as well.
How are your clients behaving?
I think that everybody is back to some of the playbooks of thinking, okay, what does this mean? Really trying to look through the fog and figure out where things land. It depends where you are. If you're close to the epicenter of the power markets, and in fact, some of those are sovereigns and countries that are thinking through what their supply chains might look like, not just in the headline crude, but in all of the products, even all the way through to things like sulfur that might drive copper production. So everybody's just going back and figuring out what resiliency they have, where else they might go.
So this is like shifting supply chains. Is there also less spending in general, or are chief executives not, buying anything at the moment because we're a little bit in a wait-and-see situation?
Well, I think in the M&A space, because we saw a transaction announced in Europe, but actually there might be more spending in the capex space because you're actually rushing to secure other production. It's interesting because we are looking at a lot of the constraints that might come through, but I suspect if you're in the energy industry, there might be some other supply that might be coming online that might be seen as more viable. Even if it doesn't come in on time, I suspect that there'll be more resiliency. There might be other gas, provinces that might, now be more incentivized to be online.
Bernie, do you have any clients actually saying, I just want to get out of the markets right now and wait and see what happens in the next couple of weeks?
It's really interesting. Last week, my sense was not. When I was talking to a lot of our traders and trying to figure it out, you could see that people didn't want to miss the bounce, as it were. So people were not leaving the market, but maybe they were not leaning in. I think that the longer this goes, I haven't seen yet a sense of, okay, where's my safe haven? Where do I go and park myself? Which feels like it might just be at the very, very short end. I think a lot of people are still trading in the market and sort of saying, look, at some point, there will be an end to this. And when that happens, I need to keep an eye on where the fundamentals are.
And have you gotten more calls from your Asian clients than European clients? Or, again, depending on where you sit, actually, you live this very differently.
Yeah, absolutely. It's such a global thing. I think out of Asia, there's been, there's a big rally in Korea earlier on. In Japan, the new Prime Minister Teki came on. So you can have a whole dialogue around that. There's a China-Hong Kong piece in terms of how the Hong Kong markets have been and how China's reaction function might be. In Europe, there's still an eye on Ukraine, you might say, and there's a sense that maybe the energy markets are a little bit more, face slightly more challenges than perhaps the U.S. less. But then if you look at TTF and other crude reactions, it's much less this time than it was during Ukraine. So I think it's spread all across, really.
Bernard, what are you doing for your staff on the ground?
Oh, we at the moment we're really work from home. We're giving them as much support as we can. I have a call with some of the team later today. We are in constant dialogue with our teams in the region. Really terrific leadership there in MENA, run by our regional country executives. So we're giving them all the support that we can get.
Are you expecting to move people to Europe or elsewhere?
No, we're not expecting to do that. People privately can do whatever they want to do, and then the firm is really helping to support. Really to support our clients, make sure that we're there to provide the liquidity, to provide the analysis. We've got a terrific research team, some in region, some outside, that are, to the question you asked earlier. So all of that is going on. The resiliency is so important. And then, critically for our clients, just interacting with them and providing the liquidity. But for each individual person and their circumstances, we've got a terrific HR team that are there to support.
I mean, the other big question is, of course, private markets or private credits. And Bank of America was, just starting to get quite serious about it. What does it mean for your plans there?
I think our plans are the same, which is that we didn't rush into it. We're massive participants in the credit markets and the public markets and the DCM markets, all of that. We've been watching the private market very well. We've had debates with the private market participants, with the regulators for years as to where the boundaries should be, how that business should be. So we feel very good about our credit positioning and how we support our clients in that space.
Do you worry that, again, going back to the markets, that something happens that's accelerated in the next couple of months because of inflation going up, because of interest rates needing to go up, because of what's happening in the Middle East?
Well, I think if I can answer your question in one way, as an old trader, one of the things that has bemused me always in the markets is what causes sentiment to change. You can go through the same fact pattern and the market reacts one way. You can go the same fact pattern and the market reacts another way. Perhaps a preponderance of things, as you're suggesting. So do I suggest a fundamental sort of break in confidence? No, I don't think so. I think that a lot of interesting things are going on in the underlying economy, in the technology space, still in private assets, in different economies that are doing well, India, places like that. But I think we have to be careful at all times that, if there is that sentiment shift that happens where everybody says, actually, I'm going to look at the glass half empty. I do think in the meantime, the dialogue that we're having about private markets, I think it's terrific, actually, because as you debate it and you shine a light on it, it's a bit like commercial real estate in the U.S. a year and a half ago. Christine, we were talking, oh my gosh, what's going to happen there? All the regional banks in the U.S. are going to stop lending. There's going to be this sort of, desert of abandon. And I think that debate around credit is a good thing, because I think it'll shine a light on it. It'll force people to look at their positions, raise, if those underwriting standards had slipped, raise them. And if we can manage through that and there's some price hits, that's okay.
So, is it like a reckoning? How would you describe it? Is it, if there is, I guess, pockets of private credit that get taken down? Yeah. Exactly. Was it the right thing?
Yeah, if pockets get adjusted, then that's a very good, healthy cleanup, as it were. And I think it is a resilience. People might say, well, because I'm part of the market, but I think it is a resilience of the marketplace, where regulators are looking. By the way, journalists and media are asking the right questions. We get our credit book analyzed by 20, 30 regulators around the world all the time. So if that happens and there's a real light shines and it gets shaken up and all the stress tests happen, the US CCARs, all of those things, and other stressors around the ECB and the Bank of England, then I think we end up in a better place if we don't break the egg at the same time, which I don't think we will.
Bernie, you also have always talked about AI very comfortably. Does it change, again, given the uncertainty, does it change the game for AI or some of the valuations out there?
I think that for AI, the credit market and the energy markets will have an impact on the technology space, and I think they'll have to be so much tougher about the energy they use, how efficient they are, their ability to fund mega-scale data centers that can do anything. So some of that free money, some of that cheaper money at the margin may not be there. But again, that's not a bad thing. I think the amount of power and energy that we're using to drive that next 5-10% of inference capability or efficiency in the AI models will always be questioned. Because, by the way, a few months ago, there was a question of the return on those investments anyway. So this will force, more returns on that. But overall, I think there's huge opportunities in that space.
I mean, it was only 4 or 5 weeks ago. Like, you tend to forget that there was a massive, maybe not a massive, but a big daily market correction because of some of the industries that AI was going after. Does it change anything what does it change actually for financial services, asset management, or anything else?
Well, for financial services, I wouldn't say we're at the forefront of this. I mean, I think the debate that was happening is AI going to undermine, software as a service type companies? Yeah. What does that mean? So I think there was a debate there. Interestingly, you might say we got a little bit further to the front because we're the end users of those services. Yeah. So actually, the debate between the AI companies and us got shortened a little bit because if there was a debate as to the fact that this new tool could provide a service, then they needed to understand what we need from those software service providers. So in that sense, maybe there's certainly coming through from the sort of an uptake in that dialogue. But
at some point, is there a worry of how you deliver alpha if everybody has the same access to the same tools?
Oh, gosh, from what the AI provide, yes, I have no doubt that there'll still be opportunities to deliver alpha. I don't think history is as Fujairah said, I don't think history is dead in that regard. I think there'll be better tools, there'll be faster tools. I mean, we've seen that if you look at the foreign exchange markets. When I started in this business, by the way, there were a lot of European countries, the lira, the Dutch guilder that were traded. All of that went away. Those traders went down by 70, 80%, but those desks remained the same. So machines are talking to machines trading a lot of flow FX, but we can provide structured solutions. When you go on holiday, you can decide at the point of payment if you want to pay in one currency versus the other. So I think what it'll do is it'll crowd in a level of sophistication around different asset classes and still make room for alpha generation.
Bernie, how much do you worry actually about, again, oil prices or inflation if this is protracted? So if this lasts, let's say, 1-2 months, even longer?
Yeah. I worry about I am starting to worry and I'm getting myself educated on the physical impact, slightly less the price action. I think the price action, there's still a lot of flexibility in the marketplace to absorb that, enough players to sort of tease that out, and large oil companies and trading companies. But I worry about a supply, the Middle East being part of a supply chain that if you're not in the market, you don't fully understand. So where is jet fuel? Where is sulfur? Where are some of the gasolines and the products? Where are they actually refined as opposed to pure crude, and making sure that ends up, natural gas is not stored for long periods of time. It's a little bit of a just-in-time supply chain. So I think that those supply chains need to keep moving. So if those were impacted in a meaningful way, I think the markets are incredibly resilient, companies are, corporates are, but I worry a little bit about the physical aspect of where the actual molecules or products are.
Bernie, thank you so much for joining us. Bernie Mensah, their president of International at Bank of America. And this, of course, is ahead of their big global conference in Europe this week. Now, coming up, the U.S. president demands other countries step up as the Strait of Hormuz remains effectively closed. We'll have plenty more on that next. And this is Bloomberg. Well, the U.S. president is ramping up pressure on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Meanwhile, a key port in the UAE has been struck for the second time in 3 days, which lies just outside the strait. Well, let's bring in Bloomberg Horizon's Middle East and Africa anchor, Johanna Barsechi. Johanna, thank you for joining us. President Trump is urging NATO allies and China to reopen the strait. What do we actually know?
Yeah, that's right, Francine. So a couple of lines here. The first is what the U.S. is conducting in terms of military operations in the region, and the second is their attempts to forcefully reopen the Strait of Hormuz. The latest being that he is calling upon 7 countries around the world to participate in this coalition of sorts to help reopen the strait and ensure the safe passage of vessels, including the likes of UK, France, of course, key NATO allies, South Korea, Japan. The defense minister of Japan has already dismissed the idea or said that the bar for them to get involved is very, very high. And then, of course, China, and China being a key player here because the lion's share of the seaborne oil that goes through the strait does end up in China's hands. We haven't had an official comment yet from China, but the state-run Global Times, which is a weekend tabloid, dismissed the idea and said this is Trump's attempt to spread the risk of a war that Washington started and cannot finish. So it's unclear at this point whether any of those countries that he's called on are going to willingly participate. At the same time, from a military perspective, as I started off saying, one of the big escalations has been that the U.S. struck Kyrgyz Island, that is the key island for Iran to export its oil. They hit military infrastructure, but in retaliation, Iran has said that they will strike back at even non-U.S. assets in the region. They are attesting that the U.S. launched those strikes from the UAE. The UAE have rebuffed those claims. That being said, we've seen several attempts, strikes at Fujairah. This is one of the key ports, strategic ports in the region, and an intercepted drone attack on a fuel depot around the Dubai International Airport this morning. So really no letting up here, Francine, and it is day 17 of this war.
Elsewhere in the region, flights are gradually resuming out of Dubai's main airport after drone incidents. What can you tell us, Drew?
Exactly that, Francine. So in the early hours of this morning, there are reports that a fuel depot very near to Dubai International Airport had been struck. It caused a fire. Shortly afterwards, the Dubai media office released a statement saying that the fire had been contained. There were no injuries. And remember, there was a similar incident to this about a week ago where there were actually 4 injuries on back of an intercepted drone. But on the back of that, the Civil Aviation Authority briefly suspended flights. And in fact, flights were temporarily halted for 7 hours. Emirates Airlines, the state-owned airlines, has resumed operations now, but with limited capacity. And of course, this is part and parcel of them looking to return back to normal, but activity levels are still way below where they were before the war started.
Johanna, thank you so much. Johanna Bersachi there from Dubai. Now, the Fed, the ECB and the Bank of England are all expected to hold rates this week on the new inflationary headwinds from the conflict. Let's discuss what it means for supply chains and, of course, portfolios with Johanna Kyrklund, Chief Investment Officer at Schroders. Johanna, thank you so much for joining us. I mean, the world is on tenterhooks to see what happens with oil and the Strait of Hormuz. This must be very complicated for central banks.
Yes, I mean, there's a number of cross-currents here, although we would argue that to some extent some of the rate cuts that have been priced in, particularly for the Fed, were a bit too aggressive. So we're already biased towards expecting inflation to be more of a risk than growth. So let's see. I mean, I think for now they'll stay put. We'll have to see how long this continues. I think there's still upside for bond yields.
Johanna, I mean, if this stays, as it is for a long time and you see dollar, actually oil staying at like 105 and going even higher, what choice do central banks have to do?
Well, I think my expectation is initially you'll see a sell-off in bond yields as they price. We still have a rate cut priced in the United States, right? So I think that probably needs to be taken out. I think while we remain at this level of oil price, I think it's unlikely. Having said that, I think ultimately a rise in the oil price is a growth shock, I think, more than an inflation shock. So we will get to a point, the more this is protracted, the more there will be concerns about growth, the more likely it is that central banks look through this. And I think people have been drawing parallels with 2022, but it's a very different situation back then. Inflation was already surging. Rates were practically at zero as we came into that year, right? We're in a very different level of yields now. So I think initially it's being viewed as an inflation shock. Eventually, if it continues, I think it will be more of a growth shock. And I think that ultimately the central banks will look through it.
So it's actually quite tough. I mean, you could see a situation where the central banks don't do anything, right?
For now,
because they can't cut,
yeah,
or they can't hike, and so they're stuck. Does that lead to a policy mistake?
I think the policy mistake would be to react too strongly to the spike we've seen. Right. But I think that's unlikely because I think they understand the risks to growth as well. So for now they stay put, and I think that's probably the right way to be. And to some extent what has already been priced by markets. So I think it's the easiest path for them.
So what's your ideal portfolio right now?
Well, as I said, we came into the conflict already positioned for inflation. So we were overweight commodities, underweight bonds, and we were positive on equities. I think at this point, I think it's too late to be buying commodities. I think you buy commodities going into a shock. You don't buy them in the midst of a shock. We've just had a price spike. The risks are more balanced here. I think you still need to be underweight duration, though. As I said, we still need to price out some rate cuts. I think people still have to digest this shock from a price perspective. And also, we're underweight credit as well. because, again, there's very little reward in current credit spreads to take account of the risks that we see, not only from an inflation perspective, but also potentially increase in default rates. So stay underweight fixed income for now. With equities, I think volatility is likely to persist. I think that the current environment does favour exposure to the United States because it does weather these kinds of things better. But we also need to look to the medium term. The challenge here is we've got multiple time horizons going on at the same time. And we still see fairly resilient corporate earnings and a low risk of recession.
I mean, are you favourable in UK stocks compared to European stocks, or actually do you look further afield?
I think that obviously the UK has a very defensive sectoral composition, which helps it in this kind of environment. So I think people should own UK from a diversification standpoint. But generally, we would favour the US over Europe at this point because it is less vulnerable to the oil price and also benefits from some of the trends we're still seeing in technology.
Johanna, I mean, is there something actually that you look at dollar and you say if dollar, what does dollar do from here? And that could change everything. It could change also what the ECB does because of the connection with euro.
We have actually moved positive on the dollar, and the reason is because it does help us to hedge the portfolio a little bit. Again, this is all about trying to get through the volatility without overtrading. I think it's a very bad idea to try and day trade geopolitical risk. We don't have an edge in understanding it. We do like the dollar versus the euro because, again, the US is better positioned for this kind of energy spike. I think the divergence in central bank expectations between Europe and the US is excessive now. I mean, they are still on the same planet. And yes, they have different mandates and different philosophies. But I think the divergence is excessive. So I think the dollar is a helpful position. It's positive carry and it hedges the portfolio.
I mean, emerging markets had a great year last year. What do you do with emerging market debt in 2026?
We still like emerging market debt. Our biggest concern for a number of years has been the level of fiscal spending, which puts, again, upward pressure on bond yields. But the dynamics are much better in many emerging economies. So we actually think that they offer still an interesting opportunity.
And does it depend on the reliance to petrodollars or also to oil? Or how do you, I mean, I imagine the map for emerging markets where you want to be invested in has changed quite a lot in the last 3 weeks.
In the short term, yes. So that creates, again, a need to position across different countries. But over the medium term, what we're really focused on is better debt dynamics, which is a structural trend in emerging markets relative to developed markets where we've effectively thrown out the rule book a while ago.
Short term, but you don't know how long this lasts for, right? So are there alarm bells after like 5-6 weeks of oil at this level, or how do you look at this in terms of timeline?
Everything that's priced into the market assumes a fairly short conflict. So obviously anything more than that would cause concerns. And I think in particular, the more protracted it is, the more it poses a major risk to growth. So far, we've been positioned for very low recession risk and we've been biased towards inflation risk. Our portfolio is designed to withstand that. If we see a more persistent rise in the oil price and if we see this conflict continuing for much more than expected, then we'd have to start reconsidering our growth view, and that will lead to very different portfolio construction.
Overall, I mean, there's been a lot of talk about South Korea, where we saw record stocks. There's been also a lot of talk of Japan. How do you play Asia?
Well, we like China because, again, we have to remember there's a number of things going on here. There's still a huge amount of technological disruption going on, and China still offers, aside from the US, it's one of the leaders in technology. So we like China. I think, Korea is also tied to the technology theme, very exposed to the oil price. Not an area that we'd be taking a strong view on. And I think that volatility you're seeing, I think in general we're seeing very volatile moves driven by positioning, retail investors. I'd stay clear of those right now. Not a good idea to try and sort of trade that kind of short-term noise.
Johanna, thank you so much for joining us. Johanna Kyrklund, there, Chief Investment Officer of Schroders. Now, this is a picture across the board for U.S. futures. Look, there does seem to be a bit more optimism than there was in the last couple of trading days. Again, it could change quite quickly, but for the moment, stock futures are rising. Dollar slipping, traders focusing on any signs of the Strait of Hormuz would reopen, as well as a slew of central bank meetings this week. Coming up, Italy's UniCredit makes a €35 billion takeover bid for Commerzbank. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Iran denies President Trump's claim that Tehran wants ceasefire talks, while Dubai's main airport and key oil port in the UAE are both targeted in a fresh wave of attacks across the Persian Gulf. President Trump says he is, quote, demanding other countries contribute to the defense of Hormuz as it remains effectively closed to oil tankers. And UniCredit makes a 35 billion euro takeover bid for Commerzbank, but says it doesn't expect to take full ownership just yet. So on to our big corporate story, and as we were just saying, UniCredit has made a 35 billion euro takeover bid for Germany's Commerzbank. Now, the Italian bank says it doesn't expect to move to give it full control. The offer may rankle the German government, which holds a stake in Commerzbank and has repeatedly made clear it opposes a takeover. Our Tom Metcalf joins us with the very latest. Tom, so this is quite nuanced, okay, as you're saying. This is not like when they say we're making this offer, but we're not going to take full control, what happens now?
Yeah, there's a lot of nuance here. There's a bit of technicality as well. So UniCredit had around about just under 30% of the stake in Commerzbank. In German law, if it goes over 30%, it basically needs to make a mandatory bid. And what it was finding with Commerzbank buying back shares is it was budging up against that 30%. And so effectively, and what I find most interesting is what this says about long-term ambitions from UniCredit. They've gone, you know what? Let's go across this thing. Let's see if we can get, a few more percentages. And then very clearly what they're really saying is, look, this can be a moment for us to engage with Commerzbank. We want to talk with you. We're interested in doing a bid. But of course, what this doesn't change is what the German side are saying. And really, so far, it's all very much we're not interested and basically go away. OK, so I
want to ask you about the German government and what role, if they could at some point be behind a deal. And also you told me that they can only make a deal once a year or an offer once a year. So after this, then they have to wait a year. Yeah, my understanding of the time frame from now is basically this is a formal bid from UniCredit. So what they have is in May, they will go out to it. Shareholders can participate or not. The smart money is they get a few percentage points because the premium is pretty small, it's 4 or 5% from when I last checked. And then basically that kind of closes off a formal bid, at least from UniCredit, at least under the rules, right? But what can happen is talks can continue, and of course, stranger things have happened, and if both sides can reach an agreement, maybe there is some kind of agreement to lift these restrictions. So it'll be interesting how it comes across, but certainly so far we're seeing all the messaging from Berlin is this doesn't really change anything for us. OK, Tom, thank you so much. As always, Tom Metcalf, they're in charge of our EMEA finance. Now, oil has fluctuated on escalating supply risks in the Middle East after a second attack on the port of Fujairah in the United Arab Emirates. The Islamic Republic has been carrying out retaliatory strikes on Israel and Arab states after the U.S. struck military sites on Kyrklund Island. Let's bring in Bloomberg's Anthony Di Paola in Dubai. Anthony, thank you for joining us. So what do we know about this latest attack?
Yes, good morning. Well, we had another attack against Fujairah, which is one of the key oil ports for the UAE. That is a second attack in 3 days because they were attacked already on Saturday as well. In both cases, that they had to suspend crude and oil product loadings. Of course, Fujairah has become increasingly important because it's a port outside the Strait of Hormuz. It's the one remaining viable exit point for UAE crude because Hormuz is blocked. We've got about a fifth of global daily consumption of oil that's blocked inside Hormuz, can't get out, can't get to global markets. And that's why we were seeing oil hitting $100 a barrel. That puts a place like Fujairah more at risk because it is that viable export point. And if that gets cut off again, that's yet another bit of oil that we have halted going to market. So at the moment, we're seeing loadings there suspended as they evaluate what the damage is from that attack this morning. And then we will have to see if that remains a safe area for exporting crude oil. Again, we've had these comments by the U.S. administration about trying to open Hormuz, about trying to get other countries' navies to come in and escort vessels and potentially open that. That's, of course, going to be a tall order. So we'll have to see if that effort gets to become more concrete, Francine.
Anthony, I mean, oil price is currently at 104.8 for Brent. Where do they go next?
Well, I mean, potentially they could go even higher. It depends on whether the market is going to react to things like the attack on Kyrklund, things like the attack at Fujairah, or whether they're going to take positive signals out of something like the flotilla that Trump is trying to put together to open the Strait of Hormuz. It looks like traders are very risk focused at the moment. So it looks like they're really focusing on the issues around that oil flow being blocked off. If we see the oil flow being blocked off, if we see additional attacks that further restrict the limited exports that we're having now, or if we see any actual damage to infrastructure, we will see oil going even higher than we are now. But right now we're at 100, kind of on that risk, but also not higher because potentially traders are waiting to see how quickly things reopen. But here we are at the point where further damage, further hits to exports risks us going much higher.
Anthony, thank you so much. Anthony DiPaolo there with the very latest, of course, on oil and the Middle East. Now, my next guest says the 250th anniversary of the Declaration of Independence comes at a worrying moment in American history, with fundamental liberal principles under attack from illiberal forces on both the right and the left. His new book, Centrists of the World Unite, argues that America should renew its faith in its founding liberal principles to tackle the challenges ahead. Well, Bloomberg opinion columnist Adrian Wooldridge joins us now. Adrian, I'm so happy to speak to you because this is a fantastic book. I know a lot of people have been waiting for this book to, come out. And basically, you argue that liberalism needs to rediscover its lost genius. Like, what specific ideas from maybe earlier liberal thinkers do you think we could do with now?
We could do with the notion that power needs to be restrained, constrained by constitutions. We could do with the notion that truth can only be achieved through vigorous debate. And we could do with the idea that individualism should be the test of everything. But that doesn't mean just the individualism, doesn't just mean the freedom to go shopping. It means self-development, the ability to make good, sensible decisions.
I guess, Adrian, the problem is that many voters feel that, the centrists represent the status quo.
Absolutely.
And a lot of people want change.
Absolutely. I think there is a huge problem there. Liberals have become the establishment, and they've become the establishment that has made certain really important mistakes. So you might be inclined to go to the left, to left-wing populism, Greens and things like that, or to the right, to right-wing populism. I think the answer is that that's wrong. Those people will betray you, but we need a new and better liberalism.
But is the rise of populism because of the failure of liberalism?
Absolutely. Absolutely. Partly because they've become the establishment and they've got all the deformations of establishment, self-dealing, being cut off from ordinary people. But also they have made certain big mistakes. The Iraq War was a mistake. The financial crisis was a mistake. I think the pace of immigration has upset people. So liberalism has got out of it's got out of sync with itself, with its best instincts.
But is it an idea problem or is it a communication problem, because it's just not that appetizing on social media?
It's an idea problem, fundamentally. I think liberalism is always a mixture of freedom and control, and that mixture has got out of sync. We need to recalibrate the mixture. The mixture was always about doing your own thing morally and doing your own thing economically, and we did a bit more emphasis on social solidarity. And the communication problems and the political problems all stem from the fact that that message has failed to deal with the problems that we have now. You go to the streets of San Francisco. This is a belief that's failing to deal with terrible problems.
I mean, when you look at, again, one of the things you suggest is that liberals should be more critical of big business. Does that help, again, with the psyche of voters? I
think we've always been, as liberals, since about the 1980s, our assumption has been that big business is a good thing, that the state needs to be rowed back. And I think that that's got out of control in some ways. Certain forms of big business, the gambling industry, the big food industry, and the tech industry have become dissolving of good social habits and self-discipline, self-control. There's the boom in sports betting in the United States at the moment is completely out of control. It's quite extraordinary, let alone the X and all these other social platforms that thrive on deceiving their audience or on selling hot emotions to people who are already a bit troubled.
But is there a space then for less hot emotion? Because
Absolutely.
Actually it does feel like
Absolutely.
A lot of countries are divided here,
Yeah.
especially in the UK. Is there really space for the Liberals to come back?
Absolutely. After the Second World War, we put all sorts of deliberate constraints on the expression of hot emotions in the political sphere, because we'd seen what happened in the 1930s. Yeah. And those constraints have been eroded, and we have the rise of a new sort of politician, Trump being the leading member of that group, who specialise in stirring up antagonism.
So, Adrian, I mean, what I struggle with is that there are real concerns that people have, which is either cultural tensions or divisions or immigration. So you need to tackle those.
Yes.
And so how do you do that as a liberal if you don't want to become a populist or make sense? Actually, it's not a worry that we should have.
One of the things that liberals tend to do now over the immigration problem, which is at the heart of a lot of things, is either to say it doesn't exist, there's no problem there, and anybody who says there is a problem is a racist, or use exactly the same arguments and language as reform, as the populists. And what we need is a liberal solution to what is a real problem. And the problem is about the pace of immigration. It's about the education level of the immigrants we're bringing in. Education is a proxy for social adaptability, and it's about an emphasis on assimilation. And in the worst cases, we haven't assimilated large numbers of people who just create parallel societies.
Who in the real world is a liberal and has a chance of getting in?
Well, that is an extremely vexing question. I can't really answer that question because I think what's happened is that we have a liberal establishment which is discredited and a bit confused. So we need to have a revolution within liberalism from younger liberals. I would say that the new mayor of San Francisco is an interesting example of somebody who says, look, things have got a bit out of control. We must have more attention to social solidarity, the state of the streets and things like that. So you are getting people coming up, mostly not politicians, when it comes to the issue of phones in classrooms. The campaign has generally been led by ordinary, engaged, worried parents rather than particular politicians, and the politicians have followed on. So we wait for Bill Clinton to come along, the new Bill Clinton.
Thank you so much, Bloomberg Opinions. Adrian Wooldridge, of course, author of Centrists of the World Unite. It's a good book. It's an easy read. It's written with clarity and also a lot of historical reference. Now, Melinda French Gates is my first guest on the new series of Leaders with Francine Lacqua, the podcast, which launches today. Having navigated some of the most defining transitions in life, she spoke to me about leadership, resilience, and why people sometimes stay in top executive jobs for too long.
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. You may not know what it is next. You may be afraid, but when you make the transition, you're also making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise is it up to the people that surround them
100%.
To say, like, look, hold on, think about what you're doing, or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? Do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like, who's not telling me the truth? And I knew there were a lot of people who weren't. But you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, especially my brothers.
And you can catch more of that interview with Melinda French Gates in the first episode of Leaders with Francine Lacqua, the podcast, which launches across Bloomberg TV at 10 p.m. this evening, London time. Coming up, we'll talk to the Irish finance minister as the EU discusses expanding a naval mission to the Strait of Hormuz. Our interview with Simon Harris is next, and this is Bloomberg. Well, the Iran conflict is set to dominate the EU foreign ministers meeting in Brussels today as they weigh an expansion of their naval operations to the Hormuz Strait. The EU's naval operations are currently confined to protecting commercial ships off the coast of Yemen from Houthi attacks. Well, joining us now is Simon Harris, Irish Finance Minister and Deputy Prime Minister. So, Deputy Prime Minister, thanks so much for joining us here in the studio.
Thank you very much.
How worried are you about the price of oil and everything that's happening in the Middle East, given the already fragile state of European economics?
I'm deeply concerned, and I think, Francine, the scale of the economic impact will obviously depend on the duration and the depth of the conflict. So, of course, from an economic point of view, let alone a humanitarian point of view, the most important thing we need to see here is de-escalation. The longer this conflict goes on, the more concerning the economic impact becomes. And, of course, there is a degree of, from an economic point of view, here we are again in terms of the uncertainty channel. There's already been so much uncertainty in the world. This heaps further uncertainty on the European economy.
Do you see any signs of de-escalation?
Being very honest, I know there's a lot of effort going on from many countries, including positive efforts from the European Union. But I think the jury is out in terms of where that's going to go. But we really do need to see that de-escalation, both from a humanitarian point of view and from a global economic point of view too.
Are you expecting the Irish government to have to intervene to do something on energy prices if they either stay at these levels or go up even further?
So we're preparing a range of measures that we could deploy in a variety of scenarios. Of course, we're trying to get the best macroeconomic analysis to make sure we make the right interventions, because what could seem right today, as you know, could indeed be the wrong medicine tomorrow. But we are prepared to take action should that be required, and we'll bottom out our analysis in the next few days.
Yes. How do you think about that? Because, again, this is a timeline. You don't want to make a rash decision too soon and then have to reverse it. But at the same time, you need to give assurance to the people.
That's exactly right. And if you look at the last 10 days alone, I mean, what we've seen in terms of the price of a barrel of oil, we've seen it at $85, $120, down to $87, back to $100. And that's just a reminder of the volatility. But there is a point at which we'll have to call it. And I think all European governments, and indeed the UK government, I'm seeing the Chancellor of the Exchequer later, are trying to get that intervention correct. So we are prepared in Ireland to act, but we're trying to make sure that the course of action we take is the correct one, because while we're talking about energy today, should this conflict go on for a prolonged period of time, of course the economic impact is beyond energy. Inflationary impact on growth, impact on the Eurozone. So we do need to try and make sure we get the best possible data across the Eurozone in the days ahead.
So what's the right way of thinking this for the EU to actually be more energy independent?
This is the key point. I mean, the key point is the European Union still finds itself too reliant on what happens in other parts of the world, and still finds itself too impacted by decisions made by others. And this has to be a sharp wake-up call in terms of the acceleration of energy independence in the European Union.
Ireland's president has condemned the violation of international law in the current conflict with Iran. Does the government back the same view?
Our president has every right to speak on behalf of the people of Ireland, and indeed has a mandate to do so. And she's right to remind us of the horrors of war, and that we should never become numb to those horrors of war, and the importance of international law and the UN Charter. Ireland always supports international law, and we want to see a de-escalation as quickly as possible.
But the Spanish Prime Minister has been very vocal and actually going against what's happening from the US and the Israeli side. Again, would you support that view? Are you closer to the way the Spaniards are looking at this, or other countries in the European Union?
I think we've been very clear right across government that we want to see a de-escalation, that we want to see the conflict come to an end as quickly as is possible, that we very much believe in international law, and indeed that this conflict is the intervention is not mandated by the UN, and Ireland has always been a very strong supporter of the United Nations. So we're deeply concerned about what we're seeing, and we can never become numb to the horrors of war and the impact on civilians.
I mean, Ireland is a very close trading partner to the US. What does this mean for trade? If the US asks for full support of its war in Iran, what's Ireland's position on that?
I don't think that will arise. I think Ireland's position on international matters is well known by all. I think our relationship with the US is deep. It's meaningful. It matters on both sides of the Atlantic economically, but culturally, person to person. There's about 30 million people in the US who claim Irish heritage. But it's also okay to disagree with disagree with friends on occasion too, and to have different viewpoints. And Ireland has very clear views around international law, around the UN, and indeed we work with European partners in relation to that. But it's important to show up and to keep talking and to keep engaging with the US.
But what should the EU's position be, for example, in trying to secure the Strait of Hormuz, something that seems very dangerous, but also unclear how that happens?
Yeah, I think that is a fair point, and I know EU foreign ministers will give further consideration to this today, to what practical measures can we take, because while there's lots of discussion, understandably, around cost alleviation measures that can be taken to help people across Europe, fundamentally this is a supply-side issue, and we need to ensure that there can be a supply of oil and certainty of that globally too. So we need to see what practically can be done at a European level, and I know foreign ministers will be considering that today.
Deputy Prime Minister, how do you see this trade deal actually between Europe and the US? Because it's unclear if the old one holds. I mean, everything's been shifted to the Middle East, so we're not really talking about this deal anymore.
I think that's true. The opportunity cost, and I say that purely in an economic sense, to this latest level of uncertainty and conflict is absolutely huge. It's in many ways taken attention off Ukraine. Putin has in many ways been a beneficiary of rising oil prices, and it is really important that we don't lose sight of very important issues around our trade agreement too. We worked very hard at a European level to try and agree a trade agreement with the US. It's imperfect, but it is very important that both sides now honour that agreement. We stand ready to honour it on an EU side. The relationship matters to both the European economy and the US economy, but it is important that they'll be in a position to bring clarity from the US side as quickly as possible.
How are you looking at defence spending, and actually how much more can you increase given the neutrality of Ireland?
So Ireland is militarily neutral. In other words, we're militarily unaligned. We're not politically so. We stand fully with the people of Ukraine. We're not immune from security risks. We have undersea cables. We're not immune from cyber attack and the likes too. So we take very seriously our national security, and we're investing more now in defence and security than ever before. And we stand willing to do more, because just because of our geographic location or our military neutrality, that doesn't provide a magic shield in terms of protection.
And do you think that'll be the case for all EU countries, given the uncertainty actually and the spectres of war?
I think so. I think absolutely. I mean, and defence and security is such an important issue for the European Union, and we've seen many member states respond in different ways. From an Irish perspective, conscious of being militarily unaligned, our focus will be on increasing our own capabilities around radar, sonar, monitoring of undersea cables across off the coast of Ireland as well. But defence and security is a really important issue of our time.
So Ireland also takes the EU presidency a little bit later this year. What will your three main priorities be?
Competitiveness, security and values. And when it comes to competitiveness, we have to remind ourselves that the European Union needs to build up economic resilience. And one very practical way we can do that is by getting savings and investment union done for once and for all. It's been talked about for decades. I really believe it's within our grasp now, if people are pragmatic, if people are willing to approach these conversations in a can-do way, that we could get this over the line. And during the Irish presidency, I want to try and see agreement on savings and investment union. That will be a personal priority for me. Also trying to steer agreement on the EU's multi-annual budget, the MFF. Again, a very important moment for Europe at a time of huge uncertainty. And continuing to stand by Ukraine, of course, will be a fundamental part of our presidency and all EU presidencies in the time ahead.
I mean, what does that look like? So trying to get people to invest more? Is it incentives?
I think it looks like a number of things. It looks like continuing our practical support for Ukraine, finding ways of unblocking the very, very unfortunate and unconscionable Hungarian block on the loan to Ukraine. But it also looks at how we can help prepare for the day after, if there can be a just, enduring peace. How we help Ukraine rebuild, how we bring Ukraine into the European family, because the people of Ukraine have chosen their future. They want to be European, and I think that in and of itself is a security guarantee.
Yeah. Deputy Prime Minister, I mean, on a very light note, there was also, the greatest actress at the Oscars is Irish.
Oh, we are so proud.
She must be a source of, being proud.
Jessie Buckley has lifted the mood of our nation at a time of such challenge in the world. She has done us immensely proud, and becoming the first female actress to ever win the Best Actress Oscar. I really want to congratulate Jessie and her amazing family. It's a very, very proud day for her family, and for Ireland.
Deputy Prime Minister, thanks so much for joining us. That was the Irish Finance Minister and Deputy Prime Minister Simon Harris. Now, today I'll be speaking to Alexander Stubb, the President of Finland, on the geopolitical uncertainty in the Middle East and, of course, the Russia invasion of Ukraine. That's a little bit later, and this is Bloomberg.